Hello, viewers. Welcome back to our show, Business Talk with Tag TV. I'm your host, Sharma, an executive director and a full time agency owner in the financial services industry. With this show, we plan to uncover new insights that you may not have seen about different businesses. Today, we have the privilege of having Regional Sales Director at Desjardins. Meet Micah Neale. He's been in the industry for over 25 years and has a wealth of experience. He's also helped develop the product part at Desjardins. He keeps helping advisors and brokers on the field, and he keeps training our teams about different sweet spots. So, welcome to the show, Micah.
Thank you, Sparsh. Thank you for having me. Pleasure to be here.
Glad to have you here. And with that, please introduce yourself. Tell our viewers a little bit about yourself as well as Desjardins.
Sure, I'd love to. Thank you, Sparsh. So, as Sparsh said, my name is Micah Neale. I'm a regional sales director with Desjardins Insurance. I've been in the business now over 25 years with Desjardins, coming up on 10 years. I'm just passionate about helping advisors, helping them protect Canadians and making sure they feel comfortable and ready to have that conversation. And I think we got a few questions you got for me today, Spark.
Absolutely. So let's dive in.
Okay.
So I understand Desjardins has a unique 5-pay PAR product, the whole life PAR product or participating product.
Mm-hmm.
Can you tell us a little bit more about this one-of-a-kind situation?
I'd love to. I'd like to go back a little bit first, though. In 2017, Desjardins actually launched its first in-house participating whole life plan. And especially you may remember at that point, we did a 20 pay and a term to 100. And of course, like everything else, when you introduce something, the general public, the advisors, they ask for, can we have a little bit more? So they asked for a 10 pay solution. So in 2018, we introduced a 10 pay solution, which is very common in the market space. But recently, we added this 5 pay solution. Now, the difference is with the 5 pay, it doesn't rely on additional deposits or overfunding. It's a straight guaranteed 5 pay solution. So five years, 60 months, and it's paid. But it is a participating whole life plan. It's obviously very aggressive because it is a 5-year option, but it's meant for Canadians that want a shorter time paying period for whatever reason. Maybe it's because they're close to retirement. Maybe it's because it's want to block off money for 5 years, but it's there. Couple that with our participating fund that we have, which has grown exponentially in the last few years, and the dividends that we're getting, it's been a phenomenal solution for Canadians.
Yeah, I hear that you guys have increased the dividend scale recently.
As of this July 1st, we went up to 6.3. We've been continually up year over year. Obviously, like other carriers, we look at how the fund's been doing, all the other factors involved, and thankfully, we've been able to increase that our dividend rate again this year to 6.3%, which is awesome.
Awesome indeed. Tell us a little bit more about how popular is this 5-pay PAR with your clients, and who's that target group if they are listening to us today? Maybe it's for them.
Absolutely, yeah. When we first introduced it, obviously being a very aggressive plan and being obviously the way it's designed, we thought that business owners, high net worth clients will gravitate towards it. And let me tell you, Sparsh, they love it. But what we found the most interest, which was interesting, was parents and grandparents. And the reason being, especially with grandparents, is they know obviously they're in their getting close to retirement years. They only have a certain amount of time before their income changes. It's more limited. So grandparents are liking it where they have the ability to buy that gift for the grandchildren, pay it off in 5 years before they retire, before their income changes. And parents are the same way. Really, anybody has a 5-year plan. I talked about business owners.
Mm.
One of the questions I know, Sparsh, if, when you ever were applying for a job, I'm sure you heard that. Where do you see yourself in 5 years? 5 years is such a synonymous timeline that everybody has. Everyone has a 5-year plan or hopefully a 5-year plan or a 5-year goal.
Yeah.
So it's been very well received. The fact that it doesn't rely on any overfunding or extra premium, it's just straight. And parents and grandparents are loving it for their children and grandchildren. So that's why we've seen the most traction.
I see. And that way it's not as risky as there are some naysayers of whole life that say you should be paying into the plan for several number of years.
Absolutely, yeah.
So that way you are taking care of that aspect.
Yeah, because with the whole life plan, maybe you need to paint it longer to have some of the values build up.
Yeah.
But because it is a 5-pay or 60-month solution, it obviously builds those values up a lot quicker inside the policy, which is great.
I also hear about Desjardins term being among the most competitive in the industry. So tell us how Canadians can make use of your competitive term plans, and what do you offer?
Yeah, with term insurance, or obviously it's been around for a long time, and it's a very great budget-friendly solution for Canadians because it is term or temporary insurance, as we call it, in the sense of that it's for a certain period. Obviously, it's great for mortgage protection. It's great for short-term needs. Desjardins recently introduced 2 new term options. We've had the traditional 10-pay, 20-pay. We just introduced a term 15 and a term 25. Now, the term 25 is great primarily for mortgage protection because most people do a mortgage.
Yeah.
They amortize over 25 years.
Right.
So it's been great. The beauty of our plan I like is with the T10 and the T20, when it renews and goes into another term, it actually goes in for another 10 or 20 years.
Yeah.
Whereas the term 15, the term 25, the term 30, when they come up for renewal, they actually go into a T10 or a term 10 situation. So they do renew, obviously. That's part of the beauty of term. It's usually renewable and convertible to that par stuff we just talked about. So they can convert it to a permanent solution. I was thinking about that today. Desjardins has 14 permanent solutions that Canadians can, if they start off with a term because of budget or whatever the need is, and they have the point when they can move to a permanent solution. That is, as opposed to like renting the apartment, now you're owning the house.
Owning the house, exactly.
So there's 14 options that we have, which is phenomenal.
Micah, I love the fact that you brought up this thing about the term renewing into another term. It's like any term, either a term 10 or a term 20, is now renewing into another term 10. It's great because I don't think any other competitor out there does this. It mostly goes up every year as their age goes up. Here, they are able to get a lock or a handle on their budget for the next 10 years, should they want to keep that up.
For sure. When we set it up and they get their policy, they can see, here's the cost for year 1 to 10. Here's the costs from year, 11 to 20. So they can see that and they can budget for it. So unlike worrying, it's going to go up every year, what's my new premium going to be? I mean, they should still be able to see that in the contract. They're able to budget. They know for the next 10 years, that's what the premium is going to be. They know at this age it's going up, at this age it's going up, but it's locked in. Then hopefully they have a discussion with their advisor, like yourself, and say, okay, do I let it renew for the 10 years? Or is this the point where I exchange it for that participating stuff we're talking about, that permanent solution, and lock it in now? Because what we find is a lot of people sometimes wait too long. Right. And wait until a little bit older, and now the cost to convert it into a permanent solution. But obviously they've got those time frames. They've got 10 years to lock it in. Here's the premium. I can think about it. I haven't got to rush into it. Have a conversation with Sparsh. Is this the right time to make the move? Well, what's really interesting, Sparsh, is our term to 65. And the reason I say that is because we're one of only 3 carriers that offers that solution. But more importantly, we're the only carrier, Desjardins that is, that offers it from birth. So from 0 to 18, no other carrier has that offer available. And there's only 2 other companies that offer term to 65.
Yeah.
I kind of called the long lost cousin, if you will. It kind of, people know they're there. It's an option. It's a great top up to a permanent solution. And, I do see a lot of advisors offering that to their clients whose term to 65. It's a nice term solution, takes them up to 65 years of age. Don't talk to your advisor, talk to Sparsh. That may be the solution for you.
I mean, that's so interesting, because then what happens is, especially for juveniles, when you're designing policies for them, and that's a big problem that you don't have a term for juveniles.
Yeah.
So what can we do? Well, now we have a solution.
Absolutely.
Amazing.
Absolutely.
I also love how some of your products can be designed in a 3-in-1 way, where there's a smaller permanent portion for clients that have a lot of budget constraints, but at the same time, they can get some portion of it as a critical illness cover, and then the LTC add-on.
Yeah, absolutely. We do offer 2 hybrid solutions, or as I like to call them, bundle solutions, where we have life with critical illness, so life with long-term care. And as you know, Sparsh, in the Canadian landscape, long-term care unfortunately, is not as readily available sometimes as it has been in yesteryears. But the good thing about Desjardins is available in 2 spots. It's actually one of our critical illness conditions that we offer, and it's also part of our bundle as our hybrid plan that it has as well. And long-term care obviously has been at the forefront recently, and things that happened in the past years.
Yeah.
So long-term care is a little bit more top of mind of Canadians than it has been. So the beauty of those solutions is you get your life insurance, you get your critical illness, which covers your big stuff that I'm going to probably talk about in a minute, and your long-term care coverage as well. The beauty is people like yourself, working with their clients, can design a plan that's tailored to them and what their needs are. There's not a one size fits all. It's let's work with you. What's your particular need? What's your wants? What's your goals? And we can tailor it to them. The other thing we can do is obviously layer or ladder the term as well. So we can do that where if there's particular needs and some of the needs drop off, we can layer those term 10, term 20, even term 30 we have as well to obviously meet the needs of Canadians.
When it comes to health, Micah, a lot of Canadians have been concerned lately, especially in the last few years. And among critical illnesses, cancer is a bigger worry for a lot of people. So how does Desjardins critical illness insurance stack up among competitors?
Well, Sparsh, you've asked me the right question there because this is something that I'm very passionate about. So what Canadians need to know is the good news is there are lots of checks and balances in place to make sure the definitions of critical illness favor Canadians. That's the good news. And in 2018, Desjardins, as a company, adopted benchmark definitions that was set out in 2013. But one of the things they realized is, Canadians are obviously very concerned about getting a diagnosis of cancer. So one of the things that Desjardins did when we adopted the definitions is we made sure we had a plan that covered all types of cancers. So whether it's life-threatening, non-life-threatening, we cover at certain percentages, but whether we introduced this in 2018, and here we are now in 2024, and we're still the only carrier in Canada that covers all types of cancers, whether it's life-threatening, non-life-threatening, treatable, not treatable. Now, if it's a life-threatening cancer, the claim would get the full 100%. The person would get it. If it's a treatable and curable, they may get a 15 or 30% of the benefit. At least they're getting something.
Exactly.
The next thing we realized was next to cancer, that cardiovascular was the next biggest concern. So one of the things that Desjardins did was make sure we had protection there for cardiovascular conditions. So things like insertion of a pacemaker, insertion of a defibrillator, and aortic aneurysm. We have that coverage for that as well. So we've had a very comprehensive plan. We wanted to make sure that our critical illness was very robust. But Sparsh, what's interesting? What I find interesting is that Canadians in general may not know this type of protection is there. They know life insurance is there. They know somebody is going to pass away. They've heard about it, maybe through family, through friends, from work, on TV. But when it comes to critical illness, they may not have heard of this. And it's interesting because I love the way that CI got started over 40 years ago now with 2 doctors in South Africa, right? Dr. Maris and Christian Bernard. Phenomenal that these 2 incredible gentlemen from the same family, both doctors, were on the very first ever heart-to-heart transplant. And one of the brothers, Dr. Maris Bernard, had a vision to say, insurance companies pay out on death, but wouldn't it be great if they had insurance that paid out on diagnosis?
Right.
So when a person gets diagnosed with cancer or heart attack or stroke or 23 other conditions, that there's a payout so they can take time away from work and make their health a priority. Right. Luckily, the South African insurance companies listened to him many years ago, 40 years ago. And actually, the first policy, I think, was written in 1983, if I remember correctly. And so it's, 41 years ago, actually next month, August, I believe it was.
I see.
And Desjardins has, when we introduced our new solution in 2018, where we revamped from our old one, we wanted to make sure it was the most comprehensive solution in Canada. And it still is that to this day. So
yeah, when you talk about all of those conditions, especially the life-threatening cancers, the non-life-threatening cancers, and then the cardiovascular conditions, yes, the other companies have they follow the same exclusion list, but no one's or not everyone is giving the same level of advances
That's the thing. That's what you're going to watch, Sparsh. You're right. I mean, and one that has adopted those benchmark definitions has the same definition. Cancer means this, heart attack means that. Where it differs is then in what particular ones they cover beyond that.
Yeah.
And Desjardins knew going in, and we worked with our reinsurer to make sure that we had that protection there for Canadians. We knew Canadians would want to make sure they have that protection. When they go in and see their oncologist, and they sit there hopefully with a loved one, and they get that diagnosis that, you can have this kind of treatment, which is, maybe provincial, or you can have this one, but it's going to cost some money. What do you have in place? What provisions do you have?
Right.
Do you have protection? Oh, yeah. I remember that CI policy I got from Sparsh. Let me give them a call and see how much coverage I have.
Yeah.
That's what we want to hear.
Right. And I also know that yours is among the very, very few competitors, if there's any other out there at all, that cover 26 critical illnesses.
Yeah, we do cover 26, which is one of the robust. The carriers vary, between the low 20s and 26. And that includes long-term care as one of the covered conditions. We have the usual suspects there. And, over the years, we've been seeing more things. But the average age that we see someone claiming for CI, I think the last information from Desjardins is around 48, 49. That's the average age of a claimant. And they're from all walks of life. The reality is that cancer, heart attack, stroke, and the other conditions, we're seeing more people claiming for dementia and Alzheimer's.
I see.
We're seeing, other things going up as well. So there's a lot of stuff there that's covered. And if people don't know it's out there, and you, Sparsh, you do a fantastic job, obviously, making sure your clients and Canadians in general are aware of it, that it's available to them.
Right. And a lot of clients, when I'm on the field, ask me, why is Desjardins more expensive? I tell them it's the Cadillac of plans. When it comes to critical illness, you don't do a differentiation like a basic plan and an enhanced plan that covers all 26 illnesses. You just want it to be the best product out there, which it is. So can you also talk about what value clients get by paying that little bit of extra?
Yeah, absolutely. And we hear that a lot, where we're not necessarily the most cost-effective solution, but I like what you said, the Cadillac, and I like that term too. The reality is, Sparsh, is that a lot of the carriers, I'll give you an example, cover what's called, and I'm going to get a little technical here, the carcinoma in situ of the breast, which is early stage breast cancer.
Yeah.
And it's phenomenal that every carrier that I'm aware of in Canada that has critical illness covers that. That's phenomenal. But carcinoma in situ is actually early stage cancer. And it doesn't happen just in the breast. It happens in the liver, in the kidney, in the prostate. It happens everywhere, right? So what Desjardins does is we cover that carcinoma in situ anywhere in the body, not just and we do obviously cover it for breast cancer, which is the most common claim seeing amongst female clients is their breast cancer. For male, no surprise, prostate cancer. Yeah. But we cover things like that. We also have a bunch of other stuff that we cover. Again, the cardiovascular I talked about. We also have basically ablation surgery. So, for example, if a female client has cancer in the breast and they have to have one or both breasts removed, we have coverage for that. That's actually 30%. Or we also have if a client has to remove of the prostate, there's coverage for that as well.
Amazing.
So we have a number of phenomenal things in our, as I said, we have the same definitions of the other carriers. We just take that little step further. We want to make sure when your client calls in and they say, I've been diagnosed with whatever it is, am I covered?
Right.
We want you to say yes.
Yes.
Yes, you're covered. Good news, you have a protection with Desjardins. You're protected. Let's go find out how much, whether it's a 15% bucket, 30%, or 100%.
Exactly. Rather give them something than say, sorry, you have cancer, but not enough.
Absolutely. But I hate for them to say, unfortunately, your type of cancer is not covered.
Right.
That'd be devastating. They've already got the devastating news from the oncologist, and now you don't want that as well.
So true. So true. I also know that you offer a second opinion on your critical illness product. Can you talk a little bit more about it?
Been in the business, as you said, Sparsh, for 25 years, and I've worked with pretty well every Canadian carrier out there on an individual basis, or obviously worked with them as support. And I always thought that what's called best doctors. I always thought that best doctors is best doctors. Everyone offers the same, right? But I realized and recognized recently that it's not all the same. That there are different levels. There's this level, there's a middle, there's a top. Wonderful for me And for your clients, if they have a Desjardins contract, we offer, again, to coin your phrase, the Cadillac coverage. So what does that mean? So Best Doctors, which is now called Teladoc, that's the new name it goes under, is the ability for a Canadian to get a second opinion on either diagnosis or treatment. So if they get diagnosed with, we'll say a cancer, for example, and the oncologist is recommending this treatment, they can engage Best Doctors Teladoc, provide them with their file, with their information, and this gets sent out to specialists all over the world in that field. So they would have a look at the file, have a look at the information, and they would come back and they'd say whether they agree with the diagnosis, first of all, and whether they agree with the treatment. Now, I don't remember the exact percentage, but I know when Best Doctors or Teladoc gets involved, a high percentage of the time, the diagnosis sometimes changes and or the treatment changes.
Wow.
But this is where Desjardins really Cadillac, to coin your phrase. We protect the client, the insured. Great. So we should. They're buying the policy, right?
Right.
We protect their spouse or partner unlimited. We also protect the children living in the house that are dependent upon the insured. And then it goes one step further. We actually protect the insured's parents, brothers, and sisters, and the partner's parents, brothers, and sisters.
Amazing.
Worldwide. So say you're here in Canada,
Yeah.
but mom and dad's back in India.
India.
Or Indonesia, or Australia, or Africa, wherever they are.
Yeah.
As long as we can get their records and get it into Teladoc, and they can look at the information, they can assess it. Not even that, it's as simple as, let's say you start taking a new medication, and you're feeling a little bit funny, not sure, you check the side effect list, which is the worst thing to do, but you check the side effect list, and you're like, should I be feeling that way? You can engage, call them, and you get a live nurse, and like, hey, should I be feeling this way? And figure it out. Now, Sparsh, I got a question for you. I'm not sure if you and I talked about this. So when we engage Teladoc, what I find interesting is there's one country where we see the most specialists. You want to guess which country that is?
India?
You got it, my friend. You got it. Absolutely. India. That's where we see, and all different, backgrounds, but in sense of specialty. But that's where we see a lot of reports come back from,
right,
is doctors from India, which is phenomenal. Some phenomenal minds in India, apparently. So
great to hear that. As a lot of our clients are also from the same country,
Absolutely.
the Indian subcontinent. So it's a great market for Desjardins.
Absolutely, for sure.
Coming back to something you mentioned about business owners right at the start. So I hear that the shared ownership critical illness plan that Desjardins offers is really popular with business owners. So can you tell us a little bit more about that?
Yeah, back in 2000, Desjardins Insurance designed a plan. Back then, it was called the EHSP, Executive Health Savings Plan. Now it's just down to EHP. And its original timeline was 12 years. And the way it was designed was that a corporate or business client would have CI protection, critical illness, and they would pay into it for 12 years. And at 12 years, if they no longer need the protection, they could collapse the policy and take what's called a return of premium. That's actually very popular on all CI plans. But it's funny how it's changed over the years in the sense of now it's a 15 and 20-year horizon. And what's even more interesting is in 2019, the Canadian government changed the passive income rules. I know, Sparsh, I'm sure you're aware of that. They said, with Canadian businesses, we tax their active income. How about we tax their passive income as well? But you know what? We're going to give them the first $50,000 on the house. But above that, we're actually going to claw back the small business deduction. And once they reach $150,000, they don't have access to that small business deduction at all. The good news is they gave us a little bit of a leeway because they said corporately held life insurance or corporately held CI will mitigate that clawback. So what it is a plan where a corporate client would have a need for critical illness, so protection if they got one of 26 illnesses. So it pays out on that. There's also a death benefit included, so it's like a built-in life insurance. But more importantly, we saw that Canadians who had a operating company and a holding company watch that retained earnings build up in their holdco. They're like, how can I liberate those trapped retained earnings inside the holdco? There must be a strategy or a vehicle or a mechanism. Well, good news is that can help you do that.
Right.
Because what happens is at the end of the day, we allow the corporate, the shareholder to collapse the policy once they don't no longer need it.
Right.
and they get all the premiums back, the premiums that they put in and the premiums the corporation put in. So it's like getting a retirement plan, if you will, but coverage in the meantime and a way to pull money out of their whole co through this strategy, through this executive health plan or shared ownership CI. And Desjardins, as I said, has been doing it since 2000. We recently had a independent legal company review the strategy. They changed a few words here, crossed a few T's, dotted a few I's, changed a few words, but they said, listen, at the end of the day, just keep on doing what you've been doing for the last 24 years, because we've had it since 2000. And it's a great vehicle for corporate clients to get access to protection, but also return our premium at the end of the day. And Sparsh, I know you know this, one of the newest areas to allow to be incorporated is realtors.
Right.
Now, realtors here in Ontario, anyway, realtors, in other provinces have been able to incorporate for a long time, but they only recently allowed them to incorporate in Ontario. Now, these brokers have access to some of these phenomenal corporate strategies, and this is one of them. So,
Right.
But again, dentists, lawyers, doctors, anybody who's incorporated should be having a conversation with Sparsh about this strategy for sure.
Awesome. And it's so good to know all of these strategies and for our viewers to learn from you even if you are an individual or even if you are a business owner, we have access to the expertise of Micah. So you're not just working with us when you're working on getting your retained earnings go up in the holdco, or when you're trying to get a normal critical illness plan or a term plan. You're actually leveraging Micah's expertise here and the Desjardins brand name.
Absolutely.
So glad to have you as one of our partners, Micah.
My pleasure. Always a pleasure, Sparsh.
Any final words for our viewers?
Well, again, I hope that anybody watching who hasn't connected with Sparsh takes the time to connect with him. And he's a wealth of knowledge. We've been working together now for a couple of years, and it's always an absolute pleasure. I know you, every time we have a conversation, it's always enjoyable. And if knowing how I interact with you, if that's the same way you interact with your clients, I know that they're in good hands. I know they're getting great advice. I know that you're making sure it's tailored to their particular needs. And at the end of the day, you just want to make sure that people are protected, their loved ones are protected, and they have the right things in place for, if things happen.
Thank you so much for your time today, Micah.
Subscribe Tag TV YouTube channel and press the notification button.